Hello and welcome back to Underdog Investing. Today I'd like to talk about NIO. Firstly talking a bit about the January 2021 sales, and then talking a bit about the share buyback, and then finally regarding the expansion to the US. So three really good pieces of news, and then I'd like to go through the stock price and what I'm planning to do. Before I jump into the video, I'd be grateful if you can smash that like button and subscribe to the channel for future updates. So starting with this first piece of news, so here's why NIO stock can rise to $85+ per share. And it's written by Mark R. Haig. So who is this person? So he's a financial analyst. On tip ranks, he has a success rate of 55% and an average return of 12.4%. So that puts him at a rank of 1,300 out of 8,000, which is top 15%. So that's pretty decent actually. So let's see what he has to say. So, NIO delivered 7,225 electric vehicles in January, and this is 352% up from the prior year. In addition, it is also an increase of 3.1% compared to the December sales of 7,007 deliveries. Now 3.1% might not sound like a lot, but if you consider the fact that firstly the December 7,007 deliveries was actually their all-time high, and in addition, December is usually a very good year for car sales, especially with Christmas and the whole festive vibe. So the fact that they still managed to increase the number of sales in January was actually very impressive. Okay, so in terms of the estimates, so Mark estimates that NIO will deliver 135,000 vehicles in 2021. And this represents a 230% increase compared to the previous year, and also a revenue of $7.5 billion in 2021. So that is slightly higher than the average analyst estimate. So average analyst estimate for revenue in 2021 is $4.9 billion. But if we take these numbers, so a lot of people think that NIO is overvalued, but according to Mark, if we look at these figures, it's actually relatively undervalued if you compare it to someone like Tesla. So first of all, if you take the market cap of $88 billion for NIO and you divide it by the estimated 2021 revenue of $7.5 billion, you can see that NIO is trading at a 12 times multiple. And if you compare that to Tesla, Tesla is actually trading at a 24 times estimated revenue for 2021. So if we were to actually take NIO and give it the same multiple as what Tesla is trading for, so which is a multiple of 24, so what we do is we multiply 24 by $7.5 billion and you get a market cap of $181 billion. And that actually is a 105% increase from the current share price. So it would mean that we would be at a share price of $123. So yeah, NIO is relatively undervalued compared to Tesla. It currently is sitting at $60 per share. And the final bit of good news from this article, so it talks about the actual sales of vehicles in China, and then later we'll zoom into the electric vehicles in China. So first of all, in the month of January alone, Chinese retail sales of passenger cars rose 25.7% year over year. So that is a total of 2.16 million vehicles delivered, which is the highest level since 2016. So that's just cars in general. But if we zoom into electric vehicles, so moreover, sales of electric cars grew 281% year over year to 158,000 in January. So generally, electric vehicles are booming in China. So this next sentence actually blows my mind though. So this was despite a month-over-month drop of 23.9%, which might be expected from the higher Christmas-related sales in December. So if you remember, I mentioned earlier that it was very impressive that NIO managed a 3.1% increase from December to January. This just highlights that the fact that the overall EV market in China had a drop of 24%, whilst NIO had actually had an increase of 3.1%, is extremely bullish for NIO. So that's the first article. Now let's talk a bit about the share buyback. So Why is NIO spending $850 million to buy shares of its subsidiary? So just to give some context, first of all, I'm sure most of you are aware already, but I'll just run through it. So NIO is an electric vehicle company which was at the brink of bankruptcy about a year ago, and they were trading at about $3 a share back then. And so what actually happened is they were bailed out by some investors in China, in Hefei, and these investors injected $1 billion into NIO. And there was some compromise to this. So with that investment, what had to happen was that NIO had to create a company called NIO China, in which NIO ended up owning 75% stake of that NIO China. And then the investors who injected 1 billion actually owned 25% of that NIO China company. And what's happened since then is that Tesla's just exploded. The world's realized that EVs are the way forward, and even NIO's share price has gone crazy, skyrocketed. And so since then, what NIO's been doing is every now and then they've been offering shares, and when they raise money from these share offerings, what they'll do is sometimes they'll buy back some of that NIO China stake. So they've been increasing their stake in NIO China. So it was increased from 75% initially to 86%. And what actually happened very recently is they just announced that they will spend 5.5 billion yuan, which is the equivalent of 850 million US dollars, to buy back 3.3% of NIO China from its strategic investors. And so that would actually give them a ownership of NIO China of 90%. So that's very good for us. Firstly, it's almost like the opposite of a share dilution. So it's a bit like concentrating the shares. And at the same time, it shows that NIO themselves are very optimistic and bullish about the future of NIO. Okay, so that is the next bit of good news regarding share buyback. And now we're going to move on to the final bit of good news regarding expansion to America. So the Chinese EV maker NIO might be coming to America. Now, let's look at what evidence we have. So Deutsche Bank analyst Edison Yu tracked down an interesting NIO tidbit. He found a job posting on LinkedIn related to business planning for the US market. The posting is now closed, but Yu says it was looking for someone to formulate an action plan to enter the US market. Now, this is very, very possible, especially with the fact that you can see a company like Tesla, which was an American car company, have moved and expanded into China and are very successfully selling their vehicles in China. So a company like NIO, which was born in China, can easily expand to the American market and then successfully sell vehicles there. So it's very possible, and especially with the whole Biden administration making it less antagonistic to China than policymakers were under the President Donald Trump. Okay, so let's have a look at the screenshot for the actual job listing. So 3 bits of important information here. So from the job responsibility, you can see they want, so one of the points was work with American companies and teams to develop American business strategies. The other point is formulate an action plan to enter the US market. And then if we look at the requirements, you can see a background with global companies' overseas market management experience is preferred. So they're serious about this. Now, they're not just expanding to the US, so they're planning to expand to other areas in terms of European regions as well. So there are already numerous job postings on LinkedIn for open positions based in Oslo. So they're serious about this. NIO are really expanding aggressively, and it's just looking great for the company. So those are the good news that I wanted to share. And let's talk a bit about the stock price actually. So we're actually at $60 and we just opened on Friday the 12th of February. And we're slightly down, but the general market is actually down. So if we have a look at the S&P 500, I think we can see that, yeah, so it's actually down as well. So it's not surprising. If we have a look at the 1 month chart, you can see that we've been trading between the $55 to $60 region. So we're actually consolidating nicely. And if we have a look at the 6-month chart, you can see that every time we have an uptrend, it's always followed by consolidation. So we had an uptrend in August, followed by consolidation, and then uptrend in October, followed by another consolidation, uptrend again, followed by consolidation, and again we're uptrending now. Sorry, we're consolidating now. So what's going to happen, I think, is that we are going to see another uptrend. As long as NIO continue to expand and deliver in terms of car sales, I have a feeling that we are going to continue this uptrend, and EVs are really the way forward now, and people are really starting to notice that. So personally, I started buying at around 33 and my average is around 40. So I'm quite happy with the position I have, but if I didn't have any shares of NIO, what I would probably do is, because we've had such a nice consolidation, I would probably start buying a small position now and then dollar cost averaging, because I believe that that gives you the best risk reward ratio. So that's the end of the video. I'll be grateful if you can smash that like button and subscribe to the channel if you enjoyed the video. And I'd love to hear your thoughts in the comment section down below. And if you found it useful in any way, please do share this video. Thank you so much, and I'll see you in the next one.